folks, there are certain things going on in the market right now that I just want to tell everybody, be careful of these certain things that we're going to explain in this video here today. And I'm kind of seeing, I get to see kind of all the vibes of the market and everything that's going on here. And I just want to kind of caution people on a few different things going on. Now, at the top here, we're actually going to talk about this stock. It's called Wish stock. Okay? I didn't think I would talk about Wish stock on the channel, but yeah, today we're talking about this one. So it's an interesting situation. First off, let me be very clear about their business model. I'm not the biggest fan of their business model at all when it comes to Wish. Their business model seems strange. I just say that. Their service and everything like that. So not the biggest fan of it, but it's interesting because this company has over $1 billion of cash on their balance sheet and virtually no debt. So basically this company, this business is being, their actual underlying business, their app and all those sorts of things is almost being valued at near zero, which is quite interesting. And that just kind of shows you this market. By the way, look at the 52-week range in this stock. I mean, that's one of the most vicious 52-week ranges you will ever see on any stock ever in your life. That's absolutely extraordinary. And so this is a money-losing company. Not a lot of people have, faith, I guess you can say, in the business model. They do have a new CEO of that company. And a lot of folks are hoping, the new CEO can kind of turn around things. But the reason I'm bringing this up is I'm just showing you, how devastated many of these stocks have been. And this is one of those stocks that right now is the business model is basically being valued at almost nothing now for this company, right? And this is one of those stocks that I think some short sellers might look at this, right? And they might say, maybe I'll buy puts on this stock. Maybe I'll short this stock, right? Maybe it's going to zero. And I was just saying, this type of situation, be very, very careful of doing something like that. The reason being is this stock is down 92% almost in the past year, 92%. And you get in this situation where you're trying to get these last few lemon squeezes in a stock like this. And I understand in this ultra, fearful market right now we're in, and, no one wanted to own any companies that are seen as like, who knows when they'll make profits, which this company would definitely fit that category. No one knows if they'll ever get to profitability and when it is. I would also caution you on buying puts on a stock like this or shorting the stock, because all it takes is a market to flip, the Russell will also go up 5-10%. And next thing you know, this stock's going to be obviously, trading much above where it's at here. So when you're in these sorts of positions, a year ago, you can make a strong argument on why you could short the stock, or even 6 months ago. But I think today, because the valuation's gotten so insanely low now, I think it's actually a tough short. And I'm not even a fan of their business model, but I just think it's a tough short. So watch out for kind of thinking, oh yeah, this looks like an easy short. Look at how much money you could have made in this. Yeah, you're a little late to the game in some of these stocks, okay? Next thing I want to talk about is crude oil. A lot of folks are looking at oil right now and they're saying, hey man, money to be made in oil stocks right now and in oil in general. So I want to start playing oil, right? Oil has not been this high since 2014 when it comes to good old WTI. The past year, 58% plus move. I mean, that's insane. Crude oil has been on a tear. And this Russia situation is just adding fuel to the fire, no pun intended there. And so a lot of folks are looking at this and they're saying, I'm thinking about playing oil stocks or just directly playing oil in general, right? I would also caution you, everything's lining up for oil to do really well with the Russia situation, with us going into spring, then into summer, more global travel opening back up. So everything's looking pretty good for oil. But if there's one thing we know about oil, is it rallies and then it has some vicious down cycles. And why does it usually have vicious down cycles? Well, the majority of time is because if oil prices go really high, everybody wants to start drilling for oil. You know why? Because it's super profitable. So if you're a company that's a driller, guess what? And oil prices are really high, you want to drill as much as possible. And so you're gonna start up the rigs left and right? And so if we look at the underlying data, well, it's very important to look at the underlying data that's going on. What we're going to find is rig counts just jumped to a 4-year high. And here's the thing, as long as oil stays, above $80, but even above $70, but specifically above $80, get ready for oil, rig count to just explode over the next several months, essentially. Oil rigs are going to go and it's going to set oil up in a position where, because there's going to be so much drilling going on, that the next thing you know, all of a sudden oil is going to start falling again. Oil is 100% of a supply and demand game, essentially. And when rig counts go really high, oil price comes down. When rig counts are really low, and then all of a sudden you get in a situation where the global economy is starting to open up again, right? You got Russia and that whole situation basically making oil prices go up. Wow. It's beautiful for oil prices, but next thing you know, all these oil rigs gonna and guess what? OPEC's not going to want to lose market share. OPEC hates losing market share. OPEC loves to make money, but the thing with OPEC, you got to understand, okay? In the Middle East, oh my gosh, their cost base, like what it takes for them to make money on drilling for oil is like pennies on the dollar compared to what it is in the States. So what I've learned is OPEC can usually drill, as long as oil is like above $30, OPEC can make a fortune on oil. At $70, $80, $90, they're making so much money, it's ridiculous. But they don't like to lose market share, and especially lose market share to the U.S. So U.S. oil rigs are going to go crazy over the coming months. And essentially, we're going to be in the situation where OPEC's not going to lose market share, so they could definitely increase production, because we've seen it time and time again where they do not want to lose market share to the U.S. And so next thing you know, if all of a sudden U.S. is drilling like crazy because there's so much money to be made, and then you got OPEC drilling like crazy, you all of a sudden end up in a market share battle, and guess what happens to pricing? And so that's why in this situation, right, you might not even see the drillers or just even exploration companies necessarily do amazing in this sort of market, because everybody's going to be looking at it and they're like, yeah, there's a lot of money to be made in oil right now, but what about 3 months from now, 6 months from now, 9 months from now? Now, certain traders might look at that and say, you know what, I can play that. I'll be able to get out before the big drop happens, right? And some will say that. Others are looking at that and they're like, man, am I really going to be able to get out in time in this situation? And that's a big risk. And if this Russia situation ever calms down, which eventually it will calm down, it's not going to calm down right now, but eventually it's going to, that would be a bad thing for oil prices there, okay? So I would just kind of caution people, understand oil is a supply and demand game, and the supply, believe me, with this much money to be made, rig counts are about to go pew to the moon, okay? And we could end up seeing rig counts among the highest we've ever seen in the U.S. And then OPEC's like, we're not losing market share, baby. We're coming in to make some of that money too, okay? So that's the next thing I want to caution folks on. Next thing I want to caution folks on is two things, okay? You have periods of extreme excitement in the market and optimism, euphoria. Definitely saw that, a little over a year ago in the market, right? And that you definitely need to be very, very careful in those sorts of markets. Now, the other situation we have, which is the market right now, is periods of extreme fear, right? And we have so much fear in the market that the Russia situation has taken the attention away from all the other fear we had. Before it was the Fed, inflation, possibility of recession, all these sorts of things, right? I mean, the market's had everything thrown at it the last 2 or 3 months, like literally everything thrown at it the last 2 or 3 months, and whatever sticks is whatever sticks. And right now it's the Russia thing, okay? Now, what do we know about times of extreme fear? Well, one thing is, generally speaking, it's a bad time to sell in periods of extreme fear. And we are definitely in an extreme fear market. Look at the VIX. The VIX has gone beast. But not only that, look at the Russell. Russell's in bear market. Not only that, look at everywhere you go on mainstream media. It's negative stuff everywhere. There's nothing positive out there right now, okay? I would call us in a period of extreme fear right now, right? So we're in this period of extreme fear. And there's two things we know about periods of extreme fear. Selling is usually a bad idea, right? And trying to get in and out. But not only that, it's usually the best time to buy. Every single time period throughout history where there was extreme fear, it was a huge buying opportunity, right? And if you look out there right now, there's no good news. There's no glimmers of hope in anything. And so we're in this extreme fear market. And generally speaking, that's a good time to buy stocks and not sell stocks. But when you have this going on, a lot of folks like to make these short-term decisions and say, you know what, I'm going to get out and I'm going to try to get back in 3 months from now, or 6 months from now, or 9 months from now, or 12 months from now, or at some point in 2023. And you just got to understand, at the end of the day, when you see a lot of fear in the market, you got to understand it's time to buy stocks. And, usually selling is a bad idea, even if you can make a little money because you flipped out. The tough thing is, when do you get back in? And some people try to get back in, and next thing you know, they get back in, and then drops more, and then they sell for another loss, and they're like, oh, I guess I won't get back in. And then next time they wait too long to get back in, and the market's already started to go up rapidly, right? And so keep in mind, if you're in extreme fear, it's usually Actually, no, it's not usually. It's always a buying opportunity every single time throughout history, okay? This next thing I want to caution people on, oh my gosh, okay, Tesla Master, I've seen some folks out there talking about shorting Tesla, right? Okay, so first off, shorting Tesla, let's talk about that game. Ask almost everybody who's ever bet against Tesla, they lose, okay? And I understand it's an attractive stock to try to short, right? And try to slay the dragon that is Tesla, like, and try to win, I shorted Tesla. Guys, oh my gosh, okay? You know, there's been so many what would be considered very smart individuals, right, that have so much data that have tried to short the stock and lost fortunes. I'm talking hundreds of millions of dollars, billions of dollars. The thing you got to understand is don't bet against Elon Musk, okay? Don't bet against Elon Musk. Don't bet against Tesla. I don't care, even if you feel there's a recession or anything like that, right? Or there's going to be a lot more fear in the market, or you feel like Tesla's going to go back down to 52-week lows. Even if that's a strong feeling, you still don't short this stock. It's just not one of those stocks you can short. I can understand if people want to, if they hold the stock, if they wanted to cash some shares, okay, fair play. But as far as shorting, that's a whole different deal. And when it comes to shorting the stock, you understand, most folks that are in Tesla don't give a rat's crap about any of the short-term stuff going on. Whatever is you know, Russia, Fed, inflation, all that stuff. People are, you know, most of the investor base in this stock is in this for the next 5-10 years. And in this because they believe this is going to be by far and away the #1 EV player in the world, which is massive. And the whole world's going to EVs. And so never mind that. You talk about the robotics opportunity for this company. You talk about the robo-taxi network opportunity for this company and all the other things their business model is going to have over time. And I can tell you, this is the ultimate dangerous play if you ever want to short Tesla. And I understand it trades at a high P. And I understand it trades at a high price to sales ratio. But it always does. And it doesn't mean like, oh, it trades at a, you know, high ratio, so it's gonna go down. It's gonna, you know, it's just, trust me, man. There's been so many very, very intelligent people and a lot smarter than anybody, you know, out there. And those folks, what do? They lose and they lose and lose. And keep this in mind, right? What did we just talk about? Oil prices are going through the roof right now, right? Which means every single person that drives a internal combustion engine is going to the gas station right now and will over the next few months. And they're going to see sky high gasoline prices. You know, $3 a gallon might be in the cheaper markets, but really they're going to be seeing $4 a gallon, $5 a gallon. I've heard some markets seeing $6. That's insane, okay? And every single person that doesn't own an EV is going to be looking and thinking, man, I would love to own an EV because I'm having to spend twice as much as I was spending on gas at this time last year, or 3 times as much or whatever, right? And so if there wasn't already enough of a boom cycle for EVs, and how many people are considering EVs, by the way, make sure to subscribe to the channel if you're not already subscribed. It's absolutely free to do so. And also, we got the massive, basically, Valentine's Day sale. It's ending here in the next couple hours for the private stock group, Financial Fortress, looking at everything I look for in stocks, how I value companies, all those sorts of things. If you want to access that, plus a Discord chat, that deal's on right now. But essentially, all these folks are looking at this and they're like, oil prices are going insane. Every time I got a pump gas, it's an insane price. And folks are going to consider, man, I think I might get an EV, right? And there's already such a boom cycle for EVs. It's insane. This is just adding more fuel to the fire, no pun intended in this situation, right? Next thing I want to talk about is Russell 2000. So the Russell 2000 recently has been around bear market territory, which means it's down 20% from its 52-week high, all right? So being that the Russell's been flirting right around bear market recently, a lot of folks are looking at this and like, well, how much longer does this last? And what we do know about the Russell, okay, outside of a major, colossal multi-year recession, the Russell goes through time periods where it's a 2 to 6 month time period. And I've looked over the past 10 plus years at the Russell, and I watched it, go down. I looked at the chart over the past, 10 plus years. And what we can find essentially is the Russell will go down 10+% several different times over the past 10 plus years. And what we find is the bottom is usually hit anywhere from 2 months to 6 months after, okay? So meaning essentially if the market goes down, so for instance right here, market, this is November 4th, right around there is when the Russell hit a 52-week high, 2458 was a 52-week high. Now it's trading right around 2000, roughly. It even went, below 2000 recently, right? Down 1900 or so. And so what we know about this situation is there's a high probability we're somewhere in the bottoming out process right now. If we didn't already hit a bottom, the only way you can really get things down substantially more is adding a ton more fear to the market. And that's a really, really tough thing to do because we're at such max fear right now. It's hard to get much more fear in the market than we already have. And so it's very possible we could have already bottomed on this. And like I said, we're already, 3-4 months into this drop. And every single drop we've had in the Russell, that's 10+% over the past 10+ years, it bottomed out within 2 to 6 months, okay? So if you're thinking the Russell's going to downtrend for a year or two, the only way that happens is if you get a colossal, and I mean a colossal recession out of that. Outside of that, good luck, okay? So next thing, don't buy into the whole small caps are in bear market, so which means they're just going to continue to do bad because that's just not how it usually works. When it comes to Chef, I was looking at this one today. Interesting day, right? Volatility through the roof. A lot of fear out there in the market. I mean, a lot of fear out there in the market. And what do we see? The Chef is green today. The Chef is green today. And you're just running out of sellers in these stocks. You've exhausted the sellers in these stocks. Every weak hand that's in the stock is out of these dang stocks already. I mean, look at the volume. It's pathetic. 574,000 shares traded hands when the VIX was 32 today or whatever it was, right? Sky high VIX. Average volume is 1.2 mil, and this traded half its volume. You just can't find sellers in these stocks anymore. You just can't find sellers. And here is a red day in the markets across the board, and the Chef finishes green. And when it comes to stock like this, and I don't think this is what a lot of shorts understand or a lot of folks in general, I hear it sometimes like, well, what if it drops on earnings? What if it goes to 10, 9, whatever? Who cares? I'll buy more shares. Like for us that are long-term investors, we don't care about any of this. We don't care about any of the short-term stuff. The Chef's going to be a $50+ stock in a few years from now. I don't care if it goes to 10 or to 14 or to 9 or to 22. It doesn't matter to me in the end. And for most folks that are in the stock, we don't care. The Russia situation, inflation, the Fed, who cares? All we know is the Chef's going to grow massively regardless. I don't care if there's a recession, the Chef's still going to grow massively. And I put my words behind that, and it will. And there's no doubt in my mind they will continue to grow. They continue to take market share. Don't matter what happens. Literally, it doesn't matter what. And so I'm in a situation where it's just getting so much harder to shake people out of stocks now because the folks that have been shaken out, they've already been shaken out. And us that are in these stocks are like, who cares? Send it down. I'll buy more shares and I'll increase my ownership position in this company. It's going to 50+ over the coming years. I don't care. And that's just our view on it. And that's going to continue to be my view. And, it's like the shorts can say whatever they want. And, oh, you got to be scared. Didn't you see what happened in Russia? Didn't you see inflation? Don't you know the Fed's going to raise rates 600 times this year? Who cares, man? All I know is the Chef's going to be a massive moneymaker over the next 5-10 years. And, if other people want to sell me their shares for cheap, I'll continue to take those shares. And for us that are longs, we'll end up prospering long term as long as the company continues to execute with the fundamentals and grows this company like a beast, like it should. And based upon what I see, boots on the ground, they're doing nothing but executing on a very high level. And, so that's my opinion on that. It's sad to see that so many people have gotten shaken out of these stocks, but it's what ends up happening in these sorts of markets, and only the strong survive. And, the ones that hold through are the ones that end up prospering, and the ones that go to the wayside end up not getting the gains. And that's just how it is. And it's been consistently like that throughout time, and it will continue to be like that. So that's that story, guys. Hope you enjoyed this. As always, don't forget that massive deal. It's ending in the next couple hours here. So if you want to access that and take advantage before it ends, check out pinned comment down there. Also, make sure you subscribe to the channel if you're not already. Much love as always, and have a great day. Leave me a funny comment, something funny. Peace.